start a minute early here so I can get through the disclosure prior to Snap reporting its earnings because I had a little position in it. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure here is largely the same. I got out of SoFi on its initial earnings pop to above 14, which is my target. I did not re-enter right away. And it's just more a function of me taking off some long risk on the portfolio, not me disliking SoFi. I do like SoFi. But just being a little patient on getting back involved. And then I took a little day trade earlier in this Lucy, L-U-C-Y, that I lost money in. And there was such little liquidity in it that when I was trying to exit into the close, I really couldn't get out without moving the entirety of the market. So I shouldn't be in that. I have a little bit left. I'm trying to work my way out. But, you know, that's the problem with a low floater. On the one hand, it could have squeezed. That's why I bought it. Super low float name on the news. But then it didn't go and liquidity dried up. So I'm a little stuck in a small position in a $2 name. So not that big of a deal. I'll probably be able to work out of it tomorrow. Okay. I'm waiting on Snap to report. Have a position into the report. Let's see what happens here. Looks like it probably just came out. Quick uptick, which is now meeting a downtick, which is meeting an uptick. I got some offers out in front of the measured move, but still higher than where it's currently trading. Snap omits formal second quarter guidance due to uncertain macro conditions. Don't get me started on Snap with the withdrawal of the guidance again. We've been there before on that. Snap Q1 adjusted EBITDA crushed 108 million versus 65 million expected. It's a really big beat. Daily active users is a very small beat, and revenue is also a very small beat. I don't know if that's enough. The adjusted EBITDA is nice, but we've seen Snap get absolutely punished in the past for withdrawing guidance. I got to make some adjustments here to my trade real quick. Is that high? 89 cents? Not enough. Ugh, now it's trading down. Had an opportunity to get some off, but I was offered higher. I think that a lot of this might depend on the conference call, given that there's no guidance. And it's such BS, because if any company can provide guidance, it's a software company. But, you know, what's the guy's name that I always hate on, yet I'm always long the stock? Evan Spiegel. I think that's his name, right? I just think this guy is absolutely the worst CEO. Just really, really bad. I just seen this guy make one mistake after the next, but you can't get rid of him because he's the founder, and I think they have like one of those dual class shareholder systems. So anyway, keep an eye on it. Now it's trading down after initially popping maybe 70 cents or so. That adjusted EBITDA beat's really nice, but nothing else is that great. I think if they gave a really nice active users beat, it would have helped. It's a very, very tiny beat. Snap sees second quarter infrastructure cost DAU of 82 to 87 cents per quarter. So keep an eye on it. I reduced some of my offers from where they were initially trading, but it wasn't quick enough to be able to sell some when it was trading above where it closed on the day. All right, so I will keep an eye on that and jump into the meeting. SPYs here are up 0.6% on the day. Qs are up 0.5% on the day. They're down a little bit after hours. The IWM is also up 0.5% on the day. So we had another green day. TLT was also higher, up 0.7%, and the dollar was green as well. So things look pretty good across the board. Markets up, bonds up, dollar up. It's definitely what you want to see. So pretty solid. Look, there's just this underlying bid to this market, and we've been talking about it, and we understand it. We understand where it's coming from. It's primarily systematic in nature. You got CTAs buying, got buybacks coming back in, and as a matter of fact, it could get even bigger as we start to see vol control turn on its bid starting next week. So strong underlying bid in a market that's also low liquidity is really helping to hold us up in a pretty big way. Last I saw, Gamma was trading around 0, so you're free to move about the cabin, but it's not as hectic as when we're in a negative Gamma environment. But this market looks great. It continues to grind higher. There's not really any major updates, I don't think, from what we were talking about yesterday in the afternoon meeting. Yesterday we spent some time discussing time frames, right? How you can be, basically I think I described it as at the open bearish from a day trading perspective, but on the small picture of the daily chart I'm bullish, but on the really big picture I'm bearish. So, time frames make everything, and we are still in an environment. Robert, you've been listening to me for a while. We are still in an environment where the underlying bid to this market is really just helping to support us, and it almost seems like as we moved higher, the market's doing an even better job absorbing bad news than it was like a week ago. You would almost conceptually think that would be the opposite, right? You would conceptually think that as we move higher, that you run into more of a situation where that bad news can be sold more easily. And I do think that will happen at a certain point. But for the moment, the market's doing a great job absorbing bad news. I thought that press conference with Scott Bessent this morning was terrible. Like, it made me feel like I wanted to just liquidate all my longs. I don't make just quick decisions like that, because there's a lot more to it, as we've seen. If anyone remembers, COVID, we knew about COVID at the end of December. We knew about COVID in January. We knew about COVID in the beginning of February, but you needed OPEX to happen in February in order for the market to actually sell and come down. And that just shows you, the strength and the importance and the power of these market dynamics. And right now, those dynamics are more bullish than bearish. The positioning risk really continues to seem like it is to the upside. But we're starting to work our way towards my guesstimate of where a positioning squeeze could take us, which I've been saying for a couple weeks now. We could see somewhere between SPY 560 and 570 on a positioning squeeze. I don't even think that if you couple it with some good news, a test of the 200-day at 573, I don't think is impossible. With that said, finally here, as we're really getting around this SPY 555, and we have now filled the gap here from April 2nd that I know. Sorry, hold on, I just got filled on something. I know Billy was looking at that gap fill. So, finally here at this point, I have gotten net short. Not by a huge amount, but my portfolio at this moment, as we were talking, I'm going out net short, even though we're closing on highs. I'm fairly neutral, to be honest, but I am technically short, and the game plan remains the same. I will continue to piece out of longs and piece into shorts the more that we are able to we're able to move up into this market. And I'm planned that we could see 573. So you got to make sure you have your risk management in place. Give me a second here on this snap. So, yeah, I mean, that's pretty much it. We continue to have moderate upside extension. We continue for, today was the second morning in a row where short-term tactical is very, very, very slightly in the red. So when you look at the intraday price action, the gap down this morning, the rest in the beginning of the day was more than enough to get the short-term tactical out of the red. And then we close strong. So I'll be curious to see if it's barely in the red again tomorrow, or if the time digestion that we primarily had throughout the day today was enough to get it out of the red. So the market is leaning bullish in terms of technical analysis. It's leaning bullish in terms of positioning, but just watch your upside extension. We did close at about $11 of upside extension again in the SPYs, so we're starting to get into the extreme territory again. And that short-term tactical just keeps kind of peeking into the red a little bit. So while I do think we could squeeze to 560, even 573 for these SPYs, I do not like new longs here unless it's a day trade. Day trade, fine. You know, do your thing, take the short-term opportunity. But in terms of anything bigger than a day trade, I don't like this market to the long side here, even as I recognize we could go $20 more up before we really see something happen. So that is the SPYs. We could take a quick look at some of our other indexes as well. What do the Qs look? Oh, the Qs were so strong at certain points throughout the day today. So yeah, Qs look pretty much the exact same as the SPYs. And the IWM was really interesting because the Russell started very weak in the beginning of the day. It was trading really poorly. And then next thing I knew, this thing was breaking up and it was up more on a percentage basis than the Qs were. So we had a really pretty big flip on the relative strength, relative weakness situation between the SPYs and the Qs all intraday. And I know someone somewhat recently was asking me about like what can we infer from that. I don't necessarily have anything to infer from that, except that I find that the IWM kind of tends to lead the other indexes in a lot of ways. So I pay attention to it. I pay attention to the relative strength, relative weakness flips when they happen during the day like that, but I don't necessarily have anything specific to draw from it. So pretty much covers everything I've got. I'm trying to think if I have anything else on the day. SMCI was a nice day trade today that Eddie called out off of this upside tail that I jumped in on. So that was a good little day trade. I mentioned I got all out of SoFi above 14. Traded a ton of PayPal today. It was all over the place on the earnings pre-market and during the trading session. I lost some money on that Lucy that I mentioned already. Trying to trade this new situation, and then when it broke through this 194, couldn't really get out of it. So I'll continue to work on that tomorrow. And I guess that kind of covers it. I took a couple like day trades in Palantir at highs today and made a couple dollars in it, but there was such a strong underlying bid to that stock. So that's pretty much all I got. I don't really have a whole lot. I'm happy to answer any questions that anybody has. All right. I think the first thing I'm seeing is from Pete. Don't you normally avoid holding stock over earnings, or if you have a swing position, you just stay in it over the period? Yeah, generally speaking, if I have like a longer term swing that I've been in for a while, especially if I'm up good money in it, I'll hold it into the report. The general idea of, first of all, the general idea I think of swing trading, and I'm a big fan of swing trading. I'm a big fan of holding positions overnight because I think that I've said this in the past. I started my career as a pure day trader. As I've advanced in my career, I have begun to feel that pure day trading is reward limiting. Because if you got a trade that's working out really well and you're up a lot in it and the daily chart looks good, why not hold that overnight to try to further increase the reward? The idea being that you're basically in a win-win situation. If the stock were to gap down the next day, you give back some open profit. No one wants that, but it's not the end of the world. And if the stock continues in your favor because the daily chart looks good and the market continues, then you are really adding on to the reward for the risk that you took, and that is awesome. What you got to try not to do is put yourself in lose-lose situations where you're down money on the position already and you continue to hold it hoping that you make it back, where you are taking on like unlimited risk for limited reward or no reward. That's the opposite of what a successful trader will do. So when it comes to earnings reports, it's kind of the same thing except more extreme. You never know what's going to happen overnight. You try to put yourself in the win-win situation, but it's not impossible for really bad news to come down and have the stock gap 20% against you. It's happened to me on random news. And the earning situation is the same deal but more extreme. If I've got a really good profit cushion, and I try to measure it based on the expected move that's coming from the options. So the expected move for Snap, as an example, for today was about $1.60, and it closed at $9.10. So basically, you have a measured move down to 750. So if I'm looking at my Snap position and I'm like, all right, I'm up enough money where if this thing were to trade down to 750, I'm still kind of okay. But if it trades up, the measured move on the upside was like $10.75 or something. Then it's the same deal, except as what I was talking about, which is overnight positions, except significantly greater, because you're probably going to get these huge movements. Snap's down 10% right now, and that doesn't even it's not even at the measured move. So Snap was pricing in, I don't know, like a 15% downside or upside move. And as much as it sucks right now to give open P&L back 10%, I'm not really sitting here upset about it, to be honest. I would greatly rather I had been able to dump some stock into the initial pop, or I would greatly rather it just to have for once ever reported a good earnings report and to trade up on it. But that almost never seems to happen with this stock. So that's the idea. Put yourself in win-win situations and do what you can to maximize risk. The way that I trade, generally speaking, I hate risk. I hate putting on risk. I hate that when I first press the button and buy or short a stock that I could lose money. But my approach is such that I love risking money that I've already made in order to make more. And I'll sometimes risk very, very large amounts of money that I've made in order to make more. That's how you really maximize reward in the business. So I hope that helps. Dennis saying today was Netflix's day 8 green. Also no outside. Yeah, we're starting to see some dispersion again. Netflix has been on fire. It's viewed as a safe haven stock, which is why this stupid Snap should not have withdrawn their guidance. That's the reason why this thing is down. Evan Spiegel is the worst CEO ever. Why would you withdraw guidance? Like, what are you worried about? Doesn't Snap make like smart glasses that no one buys? What are you worried? The cost of your smart glass that no one buys is going to go up because of tariffs? Just ridiculous. But Netflix has just been on fire, starting to really extend. It's being viewed as a safe haven stock. Had a really good earnings report. The company just continues to crush it, but it is starting to really extend to the upside here. From Brant, Snap. What didn't the market like about the report? The market didn't like the withdrawal of guidance. I really think that's it. This company is being punished for the withdrawal of its guidance. Everything else looks fine. From Dave S. Is it worth considering that the 8 and 21 EMA on the daily are crossing for the SPYs? I don't put a lot of salt into... Is that the right word? Sugar? Salt? Either way, I think it's wrong. I don't put a lot of... I don't know. I don't put a lot into moving average crossovers. I honestly don't really care about them. When you're in a sideways market, they just cross back and forth and back and forth and back and forth over and over and over again. And that actually means that you're in a range-bound market. So if we are in a range-bound market, which I think is possible, you could see this cross, and then we make a pivot high, and then we come back down, and then it crosses again, and rinse and repeat over time. So I don't really care about that one too much personally. Just be careful, Greg, on the swing Palantir short, because you got earnings on Monday next week. That's my biggest problem with my Palantir short right now is not that I'm getting smoked in it. I actually, I said when I was short this thing in the 90s that I think I literally said out loud, I kind of hope I get smoked in it because it means that everything else that I'm in is going to be paying me. And that's pretty much what has happened. It's been a little bit annoying that Palantir has shown so much relative strength compared to some of the longs I'm in, and I probably could have done a better job ahead of time just recognizing that. And I was literally calling out the long in this thing for the breakout day on April 23rd. But it's just been a name that I've been short a lot of times in the past. So it's just kind of become a go-to stock. I know very well how it trades, and I just decided to take it again, which was probably a mistake because I could have recognized the relative strength earlier and maybe chose a better stock to short. With that said, I'm very comfortable being as smoked as I am in this Palantir short that I currently have on, because I'm being cushioned by all the longs that I have, and I feel like I'm gonna have an opportunity to be able to make money back, for lack of a better term, on that short through some sort of a time and price correction as it just gets so extended. My biggest concern, and the thing I'm most annoyed about with Palantir right now, is that they have earnings on Monday, because they're pricing in a massive move. We'll have a better idea of what that move looks like at the end of this week, but they're pricing in a massive move on this Palantir. And where I'm at right now, even though I got size, I'm not upset at all to be losing money in this. I won't even be upset if it's at 120 and I continue to lose money in this. Where I'll have a problem is if it gaps up to 133 on the earnings report, which isn't impossible. It seems like the for the moment anyway, though it's pretty early, the market is pricing in the potential of a move to the 130s if it's good. So I gotta figure out. I've already started to think about it a little bit, but I gotta figure out what I want to do in terms of hedging the earnings report, because the amount of size that I have on right now, I can't hold it into the report. It's just way too much. So I might do some sort of a call spread. Yeah, I was thinking about a collar also, but I might do some sort of a call spread ahead of the report. We'll see where it's trading into the report. I might do some sort of a call spread into the report just to hedge out some of the earnings risk on the report itself. But we'll see. So that's my annoyance. I would actually feel very comfortable with my Palantir short if I knew I had more time. I just don't have more time. Looks like the market just got hit here. Is this off of SMCI? Just give me a second. Just got filled on the bid on a couple of things here. It's related to the SMCI report, and that's bringing down all the semiconductors. Well, that is interesting, isn't it? Semiconductors have been having a real struggle recently. And I don't think that headline that came out that we just saw at the close about Trump wanting to make it so that no countries... Why are you yelling at me? It's up there already. It's earnings. Just read above you. I don't remember what I was just saying. Semiconductors are having a real hard time with things, but it looks like it's bringing down the entirety of the market, which I don't mind. I'm not short, so bring it on. Oh yeah, I was talking about, if we start limiting, we're already limiting to China. We might limit to everywhere. That could be problematic for semiconductor stocks. Well, anyway, what else? Palantir we talked about already. I think the next thing I'm seeing here is from Yerbal. Can you characterize the general behavior of the market from 2 to 4 p.m.? I know you have specific strategies for the opening. Do you have something for the close? Sure. So, generally speaking, and you can review some of this information in my probability class that I have, and this is generally speaking because certain market environments is going to be different than others. Like recently, this actually hasn't applied as much as it normally does because we've had so much movement, so much volatility that trading at noon has almost been as good as trading at 10. But generally speaking, I find that 9:30 to 10 a.m. is like the best time of the day to trade, especially for experienced traders. There's a lot of price finding that's going on. Sometimes for really beginner traders, though, that first 30 minutes can be tough because they struggle a little bit with the wider spreads. And then 10 to 11 is still a really good time of the day. And the beginning of the day is a really good time of the day specifically because that's when a lot of institutions are making decisions and the big money is moving the market around. So you get big movement, and big movement leads to opportunity. So again, 9:30 to 4 is the best because you're combining a more illiquid environment in the very beginning of the day with institutions moving money. But it's also for that reason why it can be more difficult for newer traders. 10 to 11 is still a really good time because you've got institutional money still moving the market, but things have thickened up a little bit. So I find that tends to be a good time of the day to trade, and I've seen some statistics from the team that show for like beginner traders is actually the best time of the day to trade. From 11 to 2 tends to be the worst time of the day to trade. A lot of times we just become range bound, we become sloppy and choppy, and if you're forcing trading at that time or overturning your account or whatever, then you're just going to hurt yourself. So that tends to be the worst time of the day. And again, I'm saying tends. It tends to be this way. It's not necessarily a hard rule. It depends on the market environment. Because like I said, recently we've been able to really trade like all day, every day. And then 2 to 4, especially I would say 3 to 4, becomes a good time again to trade as well in some regards because you got institutional money coming back into the market. They're maneuvering themselves for the close. They are, you're also moving based on MOCs at that time of the day. My problem with trading into the close, though, and the reason why I tend to not actually initiate a lot of new positions is just because you don't have a lot of time. So, if you're putting on a day trade at 10 a.m., you've got 6 hours for the trade to work out. If you're putting a day trade on at 3:30, you only have 30 minutes. Or if you're putting on a trade that maybe could be a swing trade at 3:30, going back to what I was saying earlier about why I like swing trading from the perspective of a win-win situation, you don't have enough time in the day, generally speaking, to get a big enough of a profit cushion to feel comfortable swinging it. So I don't do as much in that 2 to 4 period. I did trade some Palantir short as a day trade today. In the last hour is when I initiated the position. Thought I could make a few dollars scalping. I did, but it was more difficult than I thought it was going to be. Yeah, I mean, that's pretty much it. Don't really have anything else to say about the time period, but I appreciate the question and I hope it helps. We got Trump speaking. Canada's Prime Minister Carney. Trump agreed on working together as sovereign states. That's good. Cool. I don't see anything else in the VTF, so I'll go over to the YouTube. I've forgotten about Jack Dorsey, Robert. He's out of my mind. But yeah, I also think that Jack Dorsey's not a great CEO. AR, do you know when, if equities are going to 24-hour trading? It's already kind of started. I don't know. So we don't have it at T3 yet, but apparently it's coming, and I'm very upset about that. I don't want it. Sorry. And I'm not sure if it's just going to be for select stocks initially, or if it's going to be every company. I really don't know. And I don't know tomorrow or next month or 6 months from now, but I know it's coming. It's coming soon. From 7-7 Athletic, you don't care about the Visa earnings? Oh, I definitely care about the Visa earnings. Visa ripping here. Do we have them in the VTF, the Visa earnings? Yes, we do. Visa authorizes a new $30 billion shareback program. That's great. You gotta love that if you're a bull. Second quarter adjusted EPS beats estimates. Rev beats. Adjusted EPS beats. Not seeing any guidance here, but these numbers look great, plus the buyback. Visa is an important company. I think it's top 10 market cap for the S&P. I think. Someone fact check me on that. So the fact that the SPYs are trading down small from where we closed, despite Visa being up after hours, is interesting. So Visa's probably helping to pad the S&P a little bit. In the YouTube from AR, do you know of anyone or firm that does NQ, QQQ arbitrage successfully? I don't personally. Sorry. From Kevin G, what's up? Been full into indexes and adding gold to my playbook. I'll be including IWM. Is it safe to say the IWM is more macro based than the QQQ, or is it as industrial as the Dow? I don't necessarily think it's more macro based. I just think it's different. I think that macro situations impact Mag 7 stocks, aka the Qs, differently than it impacts the IWM. So, and that's what creates that relative strength, relative dynamic difference. It tends to be, as an example, that higher interest rates hurt the IWM more than the Qs, and lower interest rates the opposite, as an example. So any macroeconomic numbers like a CPI or a jobs number or something like that, what's the read-through on that on the Fed and interest rates, and what's the read-through on that to the IWM QQQ relative strength, relative weakness question. So yeah, I don't think it's necessarily more. I just think it's different. I hope that helps. No problem. I'm the king of typos, because I'm always multitasking and trying to get stuff into the VTF in the middle of the day while I'm doing other things at the same time, and I don't bother even doing the spell check on what I type in half the time. I just don't have the time for it. He sure is. It makes sense, Robert. I wish I was with him right now. Sounds like a good time. All right, anybody else have anything for today? It was a relatively quiet index day, and like I said in the beginning of the meeting, there's nothing new here necessarily from the index level. You know, let's see what happens tomorrow with SMCI seeming to pull down the market a little bit, but Visa also trading higher, Snap getting smoked. So we'll see what happens with these indexes tomorrow, but there is a very, very strong underlying bid to the market. We know where it's coming from. Can it get overwhelmed? Yes, it can. I'm still paying close attention to see a time, now VKTX is upticking, to see a time where I'm still paying very close attention to see a time where the good news stops positively impacting the market in the way that it has been. But when will that be? I don't know. But we got to watch for it, because I think it could be a big signal. Have a great night, everybody. I'll see you all tomorrow.